Ever wondered about investing in Virgin Galactic, the leading American space tourism and aerospace company? Well, you're in the right place. We're about to embark on an intriguing journey, exploring the financial landscape of this pioneering entity. We'll be delving into Virgin Galactic's revenue growth, net profit margins, asset evaluations, and liquidity ratios over the years. Not stopping there, we'll also take a look at their operating cash flow and even break down their return on equity using the DuPont analysis. It's a thrilling ride, packed with numbers and insights that will help us answer the big question: is Virgin Galactic a worthy investment? So fasten your seatbelts, folks. We're about to launch into a world of financial analysis, where numbers tell stories and figures paint pictures. Stay tuned as we delve into the numbers and see whether Virgin Galactic is a worthy investment. Let's start by looking at Virgin Galactic's revenue. In the year 2018, the company set the bar with an initial revenue that became the baseline for the following years. The growth journey, however, wasn't a smooth ride. The annual compounded growth rate, known as the CAGR, stood at a notable 19% from 2018 to 2023. The year-to-year revenue growth tells an interesting tale. Between 2018 and 2019, the revenue saw a surge of 36%. Yet, in the next year, it took a dramatic nosedive, plummeting by a staggering 95% in 2020. This was a significant setback, but the company managed to bounce back in 2021 with a whopping 1,550% growth in revenue. The roller coaster ride didn't stop there. In 2022, the revenue dipped again by 30%, only to soar by 196% in 2023. This brought the total revenue for Virgin Galactic in 2023 to $6.8 million. So, what does all this mean? Well, it demonstrates that Virgin Galactic's revenue stream is anything but predictable. It's fluctuated wildly over the years, reflecting the inherent uncertainties in the nascent space tourism industry. This volatility might be a red flag for some investors, while others might see it as an exciting opportunity, a chance to get in on the ground floor of an industry that could, potentially, be the next big thing. As you can see, Virgin Galactic's revenue has experienced significant variations over the years. This is an important factor to consider when evaluating the company's financial health and its potential for future growth. In the next section, we'll delve into an analysis of the company's net profit. Stay tuned. Next up, we're going to examine Virgin Galactic's net profit. Diving into the financials, we find that in 2023, Virgin Galactic reported a net profit of negative $502 million. This may seem alarming, but let's take a closer look. Rewinding back to 2018, we can see the start of a trend. The company's net profit has been on a steady decline since then. This downward trajectory extends all the way to our current year, 2024, painting a rather grim picture of the company's bottom line. To quantify this decline, let's consider the compound annual growth rate, or CAGR for short. This metric helps us understand the rate at which something grows or shrinks over multiple periods. In the case of Virgin Galactic's net profit, the CAGR from 2018 to 2023 is 29%. This means that, on average, the company's net profit decreased by 29% each year over this 5-year period. Now, it's important to remember that a negative net profit doesn't necessarily spell doom for a company. It could be a result of significant investments in research and development or other strategic decisions aimed at long-term growth. However, when a company's net profit continues to decrease over several years, it's a clear signal that the company is spending more than it's earning. This could be due to operational inefficiencies, a lack of demand for the company's products or services, or a combination of these factors. In the case of Virgin Galactic, it's worth noting that the company operates in a highly speculative and capital-intensive industry. It's not uncommon for companies in such industries to post losses in their early years. However, the continued decline in net profit does raise some questions about the company's ability to turn a profit in the future. The declining net profit trend certainly raises some concerns about Virgin Galactic's financial health. It's a crucial factor to consider while making investment decisions. As always, it's essential to do your own research and consult with a financial advisor before making any investment decisions. Now, let's shift our focus to Virgin Galactic's assets. As we delve into the company's financial health, we'll look at three key elements: total assets, net assets, and the equity to total assets ratio. In the year 2022, Virgin Galactic had total assets amounting to $1,140 million. Fast forward to the following year, 2023, and there was a slight increase, with total assets reaching $1,180 million. Now let's turn to net assets. In 2022, the net assets stood at $480 million, a figure that rose to $505 million in 2023. This increase might seem promising at first glance. However, it's important to remember that net assets are calculated by subtracting total liabilities from total assets. So, a rise in net assets could indicate a decrease in liabilities, an increase in assets, or a combination of both. Lastly, we have the equity to total assets ratio. In 2022, this ratio was 42%, and it's slightly increased to 43% in 2023. This ratio measures a company's financial leverage. It shows what proportion of the total assets is financed by shareholders' equity rather than debt. A higher ratio indicates lower financial risk. However, considering the relatively small increase, the change doesn't significantly affect the company's financial risk profile. So, what does this all mean? Well, these figures indicate a slight improvement in Virgin Galactic's assets and financial structure. But it's equally important to remember that these are just one piece of the puzzle. They don't tell the whole story, and they certainly don't paint a comprehensive picture of the company's overall financial health. The assets tell a mixed story, with some positive signs, but also areas of concern. In our next segment, we'll dive into liquidity ratios and cash flow to get a clearer sense of the company's ability to cover its short-term obligations. Stay tuned. We'll now look at Virgin Galactic's liquidity ratios and cash flow. To start, we have the liquidity ratios. These ratios are crucial as they provide insight into a company's ability to meet its short-term obligations. The current ratio, which compares a firm's current assets to its current liabilities, stood at 5.11 in 2023, a slight dip from 5.45 in 2022. Similarly, the quick ratio, an indicator of a company's short-term liquidity, also saw a slight decrease. In 2023, the quick ratio was 5.03 compared to 5.32 in the previous year. While these ratios are still relatively high, indicating a good short-term financial strength, the downward trend is something to keep an eye on. Now let's talk about cash flow. Cash flow is the net amount of cash and cash equivalents being transferred into and out of a company. It's an important measure of financial health, as it shows how well a company generates cash to pay its debt obligations and fund its operating expenses. In 2023, Virgin Galactic's operating cash flow was negative $448 million. This is a significant increase in negative cash flow compared to 2018, where the operating cash flow was negative $157 million. Similarly, the free cash flow, which is the cash a company produces through its operations, less the cost of expenditures on assets, was also in the negative. In 2023, it was negative $492 million, a dramatic rise from negative $157 million in 2018. This increasing negative cash flow is a serious concern. It indicates that the company is spending more than it's making, which could lead to liquidity problems in the future. The negative cash flow, in particular, is a red flag for potential investors. Finally, let's conduct a DuPont analysis of Virgin Galactic's financials. In 2023, Virgin Galactic's ROE stood at negative 99%. Its net profit margin was at negative 7,382%. Asset turnover was at a mere 0.01, and the asset-to-equity ratio was at 2.34. Comparatively, in 2022, the ROE was at negative 104%. Net profit margin was at negative 21,739%. Asset turnover was 0, and the asset-to-equity ratio was at 2.38. These figures underscore the challenging business situation for Virgin Galactic. The company's negative profitability, low asset turnover, and increasing leverage indicate a dire financial situation that investors should take into account. As we conclude, it's clear that Virgin Galactic's financial situation is complex, with several areas of concern. We hope this analysis has been helpful in informing your investment decisions.